Hello, hi, hello. Welcome to latest wealth market guide, mind, money and market. My dear friends, in this episode, we are going to discuss 10 do's and don'ts during the volatile stock market. Because nowadays market is fluctuating, what are the things you have to do? Either you may be new to market or you are a seasoned. Let us start. My dear friends, let me introduce myself. I am Kailash. I am entrepreneur as well as wealth coach. I am an investor for almost 10 years. In this episode, we are going to discuss what are the 10 do's and don'ts for retailer investors, especially if you are a new. Please listen fully. Please watch fully. And even though you may be seasoned investor, please watch fully. And we need your expertise. Please guide us so that we want to improve the quality of these programs. Let us start. First point is understand why and how volatility works in stock market. Yes, my friends, please remember during the volatility means always market will be fluctuating. Sometimes it will go up, sometimes it will come down. It will go up, it will come down. If it is a bullish market, no problem. You know that the market trend is up. Whereas in a bearish market, you know that market is going down. Whereas in volatility market, it's a little bit difficult, but it is not that much tough. And it is not neither easy nor tough. Just if you use your intelligence and logical sense and statistics, actually you can make a lot of money in volatility markets. I have seen a lot of seasonal investors, they make a lot of money in volatility market also, especially if you are a trader. Now let us go into little bit details into first point. As market basics comes, especially for the investors, please remember in this market, your loss is others' profit. Your greed, others' fear. Your hope, others' doubt. This is basic market funda. Now first you understand why volatility has come into stock market. There are n number of factors. Let me list out all the factors. Yes, first go through that factors and understand why volatility in the stock market is happening. Yes, my friends, as an investor, you should know why volatility has come into market. There are n number of factors. One is supply and demand. Why the stock market is going up, why stock market is going down? Because it's pure supply and demand. Find out the investor sentiment. What is happening for the investor sentiment? Because most of the time stock market ups and downs are due to investor sentiment, especially it changes from time to time. And time to time from place to place in India as well as in other country. Throughout the world, same thing. Just find out what is the investor sentiment is going on. Whether it is a bullish trend or bearish trend or whether it is a confused. Next is just find out company performance. Because what happens is due to company performance also, even though stock market may be in the bearish trend or stock market may be in bullish, if the company performances changes, the volatility comes into stocks. Recently you might have seen in Infosys, what was the happening in Infosys? Because change of management, change of CEOs, same thing has happened in Tata, change of CEOs. So just find out the company performance as well as the management. Next factor is just check it out the legal issues. What's happening? You study from your side. Because nowadays information age, you read through the newspapers. If your friends are working in your some particular company, just find out what the legal issues are coming up, because sometimes legal issues also make the stock price volatility. How far it is true, how far it is wrong. Next, as we have discussed, the change in management also cause the price variations in the stock market. Next factor what you have to see is any news is affecting the stock market, any news affecting particular sector, or any news is affecting of particular stock, because some of the news, it may be fake or real. You should be very genuine You have to do your own survey whether the news is fake or whether the news is real. Because recently what happened, after coming to WhatsApp, some of the people, they are purposefully creating some fake news to change the stock price. Some of the operators may be working. Just check it out, cross check. Then why the volatility has come, just check it out. One more point, let me tell you. Any international affairs which are affecting the stock market, just check it out. What are the international affairs are happening? For example, during 1992, there was a war during the Bush time. And like this, some of the international things like a Greece, what happened in the Greece, right? Some Brexit, like this, you check it out, what are happening in international affairs. So that what will happen, you will come to know why volatility is happening. Whether it is a fake news or real news about the international, you check it out. Next point, what you have to check it out is any currency factors. Because what happened is now internationally, after the internet, a lot of currency wars are happening. Just go and check it out. Why this is happening, stock price fluctuations are happening, why volatility in stock market, or why volatility in particular stock which you are owning. Whether the currency wars are affecting that one, just check it out and understand the currency factors. Next, just check it out, why these fluctuations are happening. Interest rates, sometimes what happen if RBI or federal government interest rate changes, it will affect the stock prices, especially if it is in a construction sector or manufacturing sector or which are aligned with that interest rates, especially the financial institutions, the fluctuations and volatilities will start coming. Just check it out in your country, what's happening to interest rates. Especially for India, if you go into RBI sites and go on through the news, what's happening, what is real, what is a assumption, just check it out. Next factor is socio-economic factors. And for example, or natural calamities. Sometimes what will happen, what happened to your agriculture in your country. I don't know, you're watching, I don't know from which country you're watching. Just you check it out based on your agriculture products. Some of the industries based on agriculture output. Some of the industries agriculture output from the same country will affect. Sometimes agriculture of other countries also will affect. For example, take the cotton industry. Whereas in India, cotton is produced in large quantities. Suppose the cotton crop has gone. The companies which are related with the cotton crops, it may affect the stock price of that company. So first point is understand why volatility has coming into your market. This is first point. Be thorough. After the first point, let us go into second point. My friends, second point is very, very important. And especially during volatility market, suppose you purchase one stock, all of a sudden, it will come down. Suppose you purchase one 3-4 sectors, all the sectors might have come down. Most of the people, especially new investors and retail investors, with the panic, they start selling. I say the second point is don't be panic and sell what you are having. Before selling, have analysis. Let me share one example, my friends. In 2008, when the stock market has crashed, do you know that almost 10.6 billion worth stocks have been sold by the panic sellers? Out of 10.6 billions of stocks which were sold by retailer investors, in that almost $8 billion worth stocks were very, very wonderful stocks. They are fundamentally strong stocks, but with the fear of losing more money, people start selling without seeing the fundamentals. So what I can say is there are 3 ways to check. Just check it out your portfolio. Suppose whatever you are having as stocks, don't go into panic and selling because the mass is going. Just check it out. First point is if your fundamentals are strong, if you are convinced that this company is going to perform very well, if you believe that the management is very good, if you believe that in future this company is going to grow, if you believe that government is also going to support, if you believe that this is very, very suitable, then don't sell that company's share. Then don't sell that company's shares. Second point, if you are confused, like means 50-50. You are not done proper analysis, because when you picked up that stocks, sometimes it will happen you might have gone with some intuitive feeling or some tips or some people recommendation. Second type of stocks will be there. In this case, what you do is just do more analysis before selling. If you are get confused, go to some of the forums, just check it out. And otherwise, if you are having any financial advisor, go and ask that person. Or if your mentor is there, coach is there, or your teacher is there in the stock market, go and take the advice and take the help. And once again, please don't go blindly, cross check. Because during this volatility market, a lot of people will come and bombarding with a lot of stock market tips. Especially when you watch TV, a lot of things will start coming. It will confuse you. Do your own analysis. So second. Third, suppose you are totally confused why you purchase the stock, you are not at all having any clarity. If you feel the stock is coming down, just sell it out. Now let's come to the third point, what you have to do during the volatility stock market. Don't stop SIP. SIP means systematic investment plan. If you are investing in a mutual funds during volatility market, don't stop. Of course, systematic investment plan, so-called in US and other countries they called as a dollar cost averaging. So don't stop that one. And if you want, take the professional help and don't stop, because during the volatility market only SIPs work better. But unfortunately, what happens when the market is volatile, the new investor, they will get fear. So don't stop. Let's go to next point, that is fourth point. Fourth point is some of the people, some of the new investors, they want to buy. This is fourth point is don't buy just low, because some stocks may be very cheaper prices you may be getting. You will be getting tempted to buy the stocks. I am not saying don't buy the stocks if they are really valuable stocks. I know that some of the wonderful quality stocks you will get during the volatile time at very, very cheap prices and at very low prices due to market sentiment. Before investing, since it is very cheaper, since somebody has said very cheap, don't buy it. Just do your own analysis, either maybe fundamental analysis or technical analysis, and some expert. How you will get that experience is just by attending some of the training classes or coachings. Take the coaching, learn from it. Then at the time don't learn. That's what I recommend most of the people before investing, take some coaching classes, attend some workshops. Then you will have more idea. During the volatility market, immediately you can take fast decisions, right? Next, let's go to next point. Generally, what will happen during the volatile sector, don't buy only one sector. Because some particular sector, sometimes what will happen, some particular sector will be going up, some particular sector will be coming down. Don't stick to only particular sector, because a lot of people I have seen, they have some affection towards some particular sectors. Especially I have seen IT field people who are working in IT, they are having more affection towards IT. And I have seen some people, civil engineers, they are having more affection towards the civil engineering sector. I am not saying any sector is good or bad. Don't have attachment with that particular sectors. Don't keep all your money in that particular sector. Do your own analysis. Hope you have got wonderful information from this video. Hope this video is very useful. If you like it, please don't keep this knowledge only with you. Start sharing with your friends. Thank you very much. Till we meet again. Enjoy every bit of life. Have a nice day and bye-bye.